Good morning, traders and investors. Roger Scott here, senior strategist for The Trading Pub. It's Wednesday. It's October 25th. I can't believe it. I'm going to be 53 years old in 4 days on October 29th. I still can't believe it. I still feel like I'm 20, but numbers don't lie, unfortunately. It's about 7:43 in the morning. The market's going to gear up to open up in about an hour and, let's see here, an hour and 45 minutes, something like that, about an hour and 45 minutes to be as exact as I can with you. My senior assistant, Clyde, didn't wake me up this morning, so I'm a few minutes behind schedule. But he's been really busy in the background eating catnip and picking trades for you. So we'll leave him alone. And remember, when we get a trade right, it's all me. And when we get a trade wrong, it's all my assistant, Clyde the cat. What are you going to do? Folks, before we get into this video, I want to make sure that you have full information about everything we do and everything you can get your grubby paws on. Yes, grubby paws on. First of all, visit our YouTube channel. Go to roger-scott.com. In the YouTube channel, under each video, you will see a link to our Telegram channel, which for currently has free trades. Yes, free trades throughout the day, at least for another week or so. Then I want to talk to you about my VIP room that starts at noon Monday through Wednesday and 11 a.m. Thursday through Friday. Today is Wednesday. It's happening at noon. You could find the link below this video. Now let's get into all of this. And if you have any questions, please send me an email at roger@rogerscott.com and post comments below the video. I actually check them and I respond to them every single day. And if you have a question, others may have a question too. All right. So as you can see here, the Nasdaq is down about 65 points. The Dow's up about 70 points. Why is Nasdaq down? What's going on? What's happening? It's actually really simple. Microsoft had earnings. Gapped up pretty good. Looks like we may get a little upside. Hopefully this doesn't start filling the gap, because if it does, it's going to put a lot of pressure on the market. But usually Microsoft is good about that, but you got to be aware of these gaps. Usually you don't have gaps this big that don't get filled, so be careful. On the negative side, meanwhile, Microsoft is up almost 4%. On the negative side, you've got Google that is down almost 6%, almost about 1.7%, 1.7 times what Microsoft is, which is causing the market to be lower because these stocks have major market cap. What's also interesting is you could see here that the Google or Alphabet did completely opposite of what Microsoft did. One gap down made a swing high, one gap down made a swing low. The good thing is Alphabet is halting, or not halting, but stopping right now, or at least for the time being, right at the 100-day moving average, or near the 100-day moving average. So keep your eye on the 100-day moving average and Alphabet. And if you see Alphabet coming down, and if you see Microsoft not holding these levels right here, it's going to be very nasty for the stock market. All right, very nasty. I mean, not yet, but again, this can cause bleeding. And remember, we've got Meta on the table. Let's see, you got Meta today, later today. You got T-Mobile. You've got Boeing. There's a lot of things at work right now. And also, we did report yesterday, it's been overshadowed by Google and by Microsoft, but you also had Halliburton, Coca-Cola, Dow, ADM. All these stocks reported yesterday. So we're going to have a tumultuous day, to say the least. Now, tomorrow, not only do we have Meta, but we've got durable goods, we've got GDP, we've got international trades and goods and services, and on Friday you have personal income, which will have the one of the preferred gauges that the Fed looks at for inflation. So then this whole week is going to be very volatile. Now, just to give you an update, we are still holding long, short Tesla. And Tesla is down a bit. Look at that. It's just at the 200-day moving, literally sitting at the 200-day moving average. It couldn't get it up yesterday. It's below the 8-day MA, below all the averages. So I think if we can get a break below the 200-day moving average, we could see a nice down move on Tesla. We'll be looking at that today. Now, looking at the broad market, and this is where things get really interesting. Look at this channel, this purple lines. That's a descending channel that I've drew for you a long time ago. We broke through. We couldn't get through the upper end of it right here. And now we're sitting right at the 200-day moving average, and the bottom of the channel is right here. So technically, if we break down below the 200-day on the SPY, we're going to trigger some program selling, and there's a good chance we could hit this level before going back up. But this is not a picture of a good technical analysis picture. We're literally below the 200-day. If you look at the Dow Jones, you will see that we're actually gaining some ground. Looks like we bottomed out here, but the Dow is still below, and it has been below the 200-day for a full week. So we got to be very, very careful. The only saving grace we have thus far is the QQQ, which is moving sideways, which could lend itself to a little bit more upside versus downside, and that could be the bottom. But again, it's going to be very hard to say because this can turn down and break below this, and then we got the 200-day moving average. Let's just say this. Being long-term is not a great idea right now. Being short long-term is not either. That's why you want to be hedged. On the long side, we have Etsy, and on the short side, we have Tesla. That way, overnight, we have exposure in technology and consumer discretionary at the same time. But it's always good to have a long and a short if you're going to hold overnight. Looking at the sectors, and we definitely want to look at sectors today. Looking at the short-term view, this is just the last week. Consumer staples, communication, that's Meta and Google, by the way, right here, right there. Utilities, QQQ. I mean, this is as mixed up can get. I mean, look at this. Communications up here, consumer discretionary is down here, semiconductors are down here, and technology's up here right below QQQ. I mean, this thing is just out of whack, completely out of whack. Let's see if we can get some clarity. If you go back 3 weeks, it's still totally mixed up. You got utilities and technology. The most defensive sector and the most speculative sectors are literally next to each other. I mean, you can't make this up if you tried. And then you've got home builders. By the way, we got to look at home builders today because you got new home sales coming out today. So home builders are going to be very important. But home builders are at the bottom. Small caps are crappy. Consumer discretionary, Tesla, not doing so well. But the market is very, very fragmented right now, which means you don't need to be focusing on the best sector. You need to be focusing on the best stocks because it's the stocks within the sectors that are going to be outrunning things because the sectors are just totally mixed up. It looks like somebody took them and shook them up. They make absolutely no sense. And usually when sectors make no sense like this, the market needs to cool off, compensate, and then start coming back up. It gets fragmented on the way up, and it gets defragmented on the way down during a correction. That's the typical flow of things. Now let's talk a little bit about global economy, and then I'll give you the best long trade and the best short trade for today. And hopefully those stocks don't have earnings because we don't want to trade earnings overnight. I don't mind day trading earnings stocks, but I'm not going to hold overnight. So Nasdaq is down 0.61, as we mentioned. Disappointing results from Alphabet and positive results from Microsoft, although Alphabet is down almost one and three quarters as much as Microsoft. So that's taking the edge off of the Microsoft gains. Microsoft rose more than 3%, slumped over 6%. It's right there for you. All right, today we have to be, actually yesterday, we're not at today yet. Global manufacturing rose to a 6-month high, which is good, gave the market a little tailwind. Richmond manufacturing was moderate. We're pricing in about a 30% chance of the Fed is going to raise interest rates in December. I think they're actually going to wait till January because the bond market, as you will see right here, has been doing most of the dirty work for them. See that? There's very little they have to do. They just have to sit back right now and wait. And this doesn't look like happiness. We're now below the 8-day EMA again. And if this goes down, it's going to put pressure on real estate, tech stocks, consumer discretionary, real estate, and I can go on and on and on and on. Let's go back to our analysis. Federal Reserve, Jerome Powell is speaking later today. I don't think that's going to be a major. We're queuing up Meta, T-Mobile, IBM, and Boeing. We're looking at 1.7 year over year. I think this number was slightly lower yesterday, but that's the expectation right now that's baked into the market. So if we start going below this, it's bad. If we start going above this, it's good. We're going to have to be looking at the real estate sector and new home sales as they are reporting today and building permits. We got to look at this. They've been mixed. They've been really, really mixed, this data. It's coming out at 10. So we may want to not day trade for the first half hour of the day. And by the way, don't trade the first half hour of the day and always keep your eye on the SPY on its daily volume. If volume is below average, your day trades are going to be very muted. You're not going to have any follow through. So if you're doing reversion type of trades, those kind of days are good. But if you're looking for trend moves, those kind of days are not good. Just wanted to give you some feedback on that. We saw that in motion yesterday. We put on like 6 trades, and basically most of them were just little baby profits, little baby losses, scratches, just didn't get anywhere. Probably best if I just stayed away from the market yesterday. But we did okay. We didn't lose any money. We actually made a little bit. Europe is down 0.34 as investors digested mixed corporate results. Real estate and luxury stocks took a beating. And survey showed that German business sentiment improved in October. Getting a little tailwind from Europe. China closed higher. They had government support, which includes issuance of additional sovereign debt. They're doing everything possible to prop up their economy. We got a little tailwind from Japan, closed higher, tracking positive overnight sessions Wall Street, while Beijing stimulus measures also boosted sentiment. Financial and consumer cyclical stocks are doing well over there. Now, look at all the earnings today. It's going to be very hard to trade. And if you look at this, each individual sector, look at this. Spider looks like it could be creating a base here. Same thing with the QQQ. Financials, I don't know. Things just aren't looking great. Consumer staples are actually starting to prop up. They're getting defensive. Utilities are propped up. I like consumer staples and utilities here. Let's see if I like anything else. Maybe semiconductors a bit. We got to give it a little more time. I do not like retail. I mean, look at retail. This looks like it's ready to make a double bottom there. I don't like consumer discretionary, although it looks like it's gearing up a little bit here. We got to give it a little more time, at least to come up here. But honestly, the Dow Jones doesn't look bad, which is blue chips. Consumer staples don't look bad, which is blue chips. And utilities don't look bad, which is blue chips, which is why the Dow is outperforming the QQQ in the last few days. And with earnings on big tech stocks, it's no good. Now, let me give you here some stocks that I like to the upside and to the downside, okay? Let me show you some stocks that I'm really liking right now. I like Lilly right now. I do. I like CEG right now. I do. I still like NVIDIA. I think NVIDIA bottomed here. Somebody asked me why I think NVIDIA bottomed. Let me show you why. There was actually a reason for it. We built beautiful support over here. Right there. And look, it bounced right off of that level. This is why I was pretty confident that we were going to bounce, because we have a very strong support here, and it bounced really hard off of it. And support and resistance, folks, really does work. I know, it's really simple, but sometimes simple is good. Google's not looking all that great today. We know that. You probably want to stay away from tech today, at least overnight. Progressive is looking great. So the 2 stocks that I really like, Lilly, or 3 stocks, Lilly, CEG, and Progressive. Okay? Those are 3 bullish stocks. This one here, NGR, is looking amazing. So NGR, SEG, and Lilly, those look good. Those look really good. Now to the downside, oh boy, where do I start? Okay, SEDG, what a crappy stock. Enphase, Advanced Auto Parts. Oh, I'll be looking at this baby today. So to the short side, ILMN, SCDG, Enphase, these are similar. So just pick one, okay? Not FMC, it bounced too hard yesterday. Right here, Advanced Auto Parts, ILMN, SCDG, or ENPH. Those would be my top picks. Now, before I let you guys go, most traders think it's too late to benefit from the massive year-long rally in the AI. And if you're one of those people, well, think again. Chuck Hughes has found a way to target hidden pockets of income on some of the most powerful AI-backed stocks in the entire market. I'm talking about names like Apple, AMD, even Meta. But there's one stock that's trumping them all. That's right. And we're going to give the stock away at 1 p.m. today. You don't want to miss out. I'll see you there with Chuck Hughes at 1 p.m. Eastern Time. You don't want to miss out. It's going to be a very cool class. Stop by my VIP room, and then we'll go right from there into the program. And I'll be giving hot trades in VIP room like I always do. If you have any questions, comments, concerns, whatnot, roger@rogerscott.com, or post your comment below the video in the YouTube channel, Roger-Scott. If you don't know where to find the YouTube channel, go to YouTube, type Roger-Scott. All the goodies, links to everything are below each video. I'll see you guys later, and I hope you're having a great hump day, and count down to Uncle Roger's birthday. Bye.